Hello, welcome to this week's edition of Market Gauge's Market Outlook. This is Jeff Bish, president of MarketGauge.com, filling in for Keith, who is attending the trade show in Las Vegas this week. In this edition of the Market Outlook, I'm going to cover three different topics. We're going to look at the indicators that we typically look at to assess the overall market's health. And I'm going to focus on the major indexes, SPYs, Qs, IWMs, and the Dow. And then I'm going to talk about some comments made by two well-respected traders who were guests on CNBC on Friday, who both independently referred to Apple right here as a generational buy. And if we have time, I will also look at some of the stocks that are coming up in our Slingshot setups product as being oversold and at a potentially good spot to look for a bounce. If you saw our recent webinar, you know that the Slingshots setups product is all about identifying and pinpointing stocks that are at a key level that could move quickly. So let's get started. The question I think on a lot of traders' minds this week is whether or not the reversal that we saw in the major market indexes on Friday indicates that there is potential for a bottom here. Now, when I say reversal, I'm using that term loosely. I am calling it a reversal for right now because the market was down on the day pretty significantly and then managed to not only close up, but close up near the top of the range. By many accounts, it's not in some of the indexes technically a key reversal because in all indexes didn't close over the prior day's high. In some situations we do have key reversals, but I'm not going to focus too much on that because I'm going to look first at the indicators and just see if we've got support for the fact that the market might bottom here, because the selling has just been relentless, unforgiving. Every time we see any kind of a rally, the sellers come in. So let's take a step back, look at our indicators, and see if the structure, or I should say the market breadth, the internals, support thinking bottom here. Now, I'm going to say right up front that my feeling after looking at what we're going to see is that we've got pretty good potential to see a bounce, but we don't have a confluence of situations that would lead me to feel like we've got the flush that you really like to see at the lows. The biggest problem I think we have right now with trying to look for a technical bottom is we don't have a real flush. Having said that, we have gotten pretty beat up, and we could be at what I'll call a temporary or a weak bottom. One of the reasons I say that is because looking at the McClellan index here, you can see we've gotten pretty oversold. We always like to see for some positive price action and some hook before we start to think that maybe McClellan oscillator or the advanced decline, the breadth, may have bottomed. We're certainly at a level here that would suggest yes, we've got the hook, and so if breadth continues to improve, the market is likely to bounce or consolidate based on this indicator. So this is nicely oversold and looking like we might have the hook on the bottom. If we look at another measure of advanced declines, our 10-day sum of it, we can see that this one has gotten extremely oversold. And that's, for right now, that's a good sign. We want to see these things hit pretty hard in order to be more confident that we might be reaching a level that is worthy of a low. And you can see we haven't been this oversold since since May of this year. And in general, this is a pretty significant level. So on this basis, I would say yes, 10-day advances, 10-day sum of advanced declines is looking like a bottom formation. Now if we look at the shorter term picture, this is the 5-day up-down volume ratio on the bottom and the 12-day advanced declines up top as a ratio. You can see that both of them have exceeded the lower ends that we start to look for bottoms in. Keep in mind that this combination of indicator, the way we look at it, is you want to see both of them oversold and then both of them turn up. We've got that now. So on a shorter term basis, this is looking pretty good too. So if McClellan is a longer term view and the 10-day is short to intermediate term view, and then the 5-12 combination that we're looking at right now is a shorter view, all of them have reached levels and turned up that are constructive for looking for a bounce. Now that's all based on advanced declines. Let's take a look at the VIX, which is not at all based on advanced declines, based purely on the volatility of the OEX options. And as you may know from looking at this video on weeks prior, we like to look at the VIX in a number of different ways. And one of the ways we like to identify potential bottoms is to see the VIX trade outside of this Bollinger Band. Well, the Bollinger Band is up here and the VIX is down here, which is really not what we want to see. We want to see a little bit of panic, and as we see VIX right here, there isn't any panic. So this points to what I was saying earlier, the concept of having a flush, no evidence of it here. One thing we do want to keep an eye on though for weeks ahead is the moving averages here of the red is the 200, the blue is the 50, and if that crosses over, it has a longer term impact on the sentiment of the market being negative, and we don't want to see that happen. A spike higher would have been perfect, a little bit of a flush, and then have the VIX work its way lower as the market works its way higher, if the bulls were to have their ideal scenario. Well, we didn't get the flush, and the progressively more negative and fearful sentiment is rising, so that is a longer term, not bullish, but it's not something we'd really trade on right now given the current situation. So before I leave this page, for any of you who were watching the Outlook video towards the end of the summer, you may recall this chart that I put up, and the focus of this chart, to summarize it, was that when this ratio of gold to S&P crosses, it's generally not a good indication for stocks, and gold will outperform stocks. And so the video that I did this in was just at the end of August, and you can see gold is breaking out, SPYs are breaking out, and the premise was, in the end, gold generally wins as a better performer when this ratio is the red line over the green line. So I'm just pointing out that not only is it still there, but it's elevated, now primarily elevated by the weaker S&P, but that's the whole point of this. So I'll also be keeping an eye on this ratio for a longer term perspective of the strength in the S&Ps. All right, now let's take a look at the indexes themselves. Let's take a look at the price action. Now to start, I'm going to look at the weekly. And again, I want to really focus in on these 4 indexes. There's a lot of other stuff we could talk about, but to try and keep this relatively short and cover all the topics, I'm going to narrow it down to the 4 indexes, weekly perspective, and a consistent view of them. The moving average that we're looking at here, the one I want you to focus on, is the magenta. This is the 65-week moving average. It's a value we like to look at on a weekly basis. And I've also got trend lines. And for the most part, I believe all the trend lines are going to come in from the significant low down in '09. We're really looking at where we are in terms of major support. Is this a good place for the market to bounce after a pretty significant correction that we've experienced? So I've looked at, you can see the trend line from the low, and it's a closing trend line, and that closing trend line here, the white line coming from the low, lines up pretty much with this 65-week moving average. It didn't quite get down to on the SPYs. If we look at the closing trend line, that's this white line, from the more recent lows, we have just broken it this week. So we're in between this level. So SPYs really are not at a pinpoint area to say this is where it should stop. You'll see on the other charts we're going to look at this level as potential support. You'll see on the Qs that we're going to compare its ability to hold the highs of 2011 or late 2011. SPYs are there too. So all in all, weekly basis, not a bad place for it to stop. However, not an absolute obvious place for it to stop. Now let's take a look at the Dow, the diamonds, DIA. In this case, you can see that it has stopped. Here's the closing trend line from the lows. I'll expand that for a second, or in a second. It's pretty much stopped right on it. It stopped right on its 65-week moving average, and it's holding right in around the consolidation lows that were established after this spike low. Additionally, if we look at the stretch in terms of a parallel channel, here's a channel top drawn here and its parallel line. This is a parallel line calculation that I am a big fan of in terms of identifying objectives or targets, and we've gotten down to the low end of that range as well. So the Dow really is at a good place for us to expect a bounce. And if I expand out the chart, you can see that the trend line it's sitting on is the closing trend line coming down or coming back from the 2009 lows. So let's take a look at the Qs. Alright, starting from the big picture here. I've got a trend line. The top trend line here is the closing trend line. The lower trend line is the trend line from the lows, and you can see that the Qs came down nicely right in between the two. The Qs also still have maintained this 60 level, which was a significant high here. So the Qs really led on the breakout to the upside, and they've managed to hold that as well. You can see, I'll zoom in, that it is sitting right on that 65-week average, and it's also sitting right on that same channel that I drew in the SPY. So there's a lot of stuff coming together here in the Qs just on the price action, and it's sitting right at the lows again established after this low in April. Not a bad spot at all on a weekly basis for us to expect some support. So finally, let's take a look at the IWMs. Again, with a consistent view, the closing trend line from the lows will come right down into it. The magenta line is the 65-week. We're sitting right on it. The lows of the consolidation formed after the spike low in April of this year. We're testing that level nicely, and we're sitting right at the bottom of a channel. All right, so a lot of stuff coming together. Now remember, this is a weekly chart, so there's plenty of plus or minus, give or take, a couple of percent either way here in terms of the expectation of pinpointing the market. But if your question was, which the question I think should be, have we really stretched to a level where we can bounce? On a basis of all this, we've got to be getting close. The oversold nature of the market internals indicates that we're stretched. The price action indicates that we're near some support. Here, however, we haven't seen any kind of a flush. So let me play devil's advocate here, and let's take a look at the daily charts. I'm going to start with the SPY, and I want to just look at the volume. I have to say, when I look at the daily chart, where is the volume? All right, if this is a significant low, and what you're looking at, the black line here, is the 200-day. If this is a significant low, this is not significant volume. It's nice volume, but it's not as good as we'd really like to see. The price action here is nice. A reversal, close up in the upper part of the range. I'm not sure if that we actually got above the close above the prior day's low, 36.49 versus a close of 36.37. No, technically not. So could we see a bounce just off this level of volume and this reversal? Sure, we could. Might I expect it? I might. Is it the flush? Not the flush that we'd like to see. IWM is perhaps the most encouraging on the price action and its location. But again, no flush in terms of the volume. All right. The other concern I have, which you don't see in the charts, is what you like to see when you have good news is good price action. Now, I would suggest that the press conference held after the meetings on the financial cliff or the fiscal cliff on Friday, on this particular day, could not have gone any better versus expectations. It's what turned the market from being down on the day to rallying up to closing to the end of the day. But the turnaround was, in my opinion, boring. It was weak. A good turnaround would have been several hundred points on good volume. That would have said that the market's convinced that the fiscal cliff is going to be dealt with in a way that the market really likes. Instead, I felt like you got as good a response as you could have expected from politicians, and all we got was a 100-plus point rally in the Dow. This price action that you see right here, not that exciting. So, if I had to sum it up, I'd look for a bounce if the price action is right. We use the opening range and some key reference points to identify whether or not we're going to continue to move higher or it'll continue to fade lower. We're going to let the price action dictate, but certainly it's not a buy it and just hold your nose and not worry it's going to go back up situation, which you'd like to see. It's going to be a very careful execution of trying to trade the bounce if it comes, and the rally, unless something evolves that makes this bottom much more convincing, the rally is very likely to give us an opportunity to sell it. Okay, that said, and since I'm on the IWMs, I said in the beginning of the video I'd show you some of these setups that we look at for oversold stocks. Now, if the market is ready for a bounce, looking at stocks that are oversold and in a good location for a bounce is a great way to pick up stocks that are beat up, because if the market rallies, you never know whether the market's going to run in and buy the leaders or run in and buy the laggards. So with slingshot setups, we have a way of identifying both leaders that might rally and laggards that might rally. I'm going to focus you on a couple of stocks off that list. If you've got the product, there's going to be several more than just these, but the first one is actually IWM. So if you're just looking at the indexes, keep an eye on IWM from a rally point of view, and here's why. Here's my setup. I'm not going to go into all the settings. There aren't many, but we're basically looking for a confluence in RSI on a daily, a weekly, monthly, and that particular time frame also being close to a significant moving average. So I've got daily on the top, I've got weekly on the lower left, and monthly on the lower right. So if I go to IWM in this view, the reason that IWM becomes one of my focuses is because on a daily basis it got oversold. At the same time, on a weekly basis it exceeded our oversold levels, and for all the reasons I just described in terms of the price levels, and here's that moving average again. So it's at a good spot, and it's oversold based on the RSI. So we'll be looking at applying our rules for entry for an interesting trade. For this is one of the opportunities to trade stocks that have been beaten up on the long side. Another stock in that meeting similar criteria is WMB, right? Williams and Company. Now, Williams got oversold on the daily several days ago. On the weekly, it's still oversold, and you can see it's got a confluence of important moving averages. So here's the 200-day and good price action. Okay, good price action on Friday in terms of this actually closed above the prior day's high, never took out the low. So the last 3 days have been much more positive than the overall market, and I believe it's also sitting at, and it is sitting just above an interesting trend line. So good spot in Williams, oversold on two different time frames, and that's the kind of situation that we look for. And finally, a name we all know, I'm not going to say and love, depending on whether or not you trade it, but I'll bet you shop there, Amazon. All right, now Amazon has an awfully interesting pattern here right on the 200-day. You probably wouldn't need me to tell you that prior to this, but volume a bit weak, but at least better than the long average of it, better than the last several weeks, and coming off, as I said, an oversold level on both the daily and the weekly. It sits on a daily moving average that's important, right above a weekly moving average that's important. So you got a lot of things coming together in Amazon too. It's beat up, and so when the market gets beat up, here are 3 beat up stocks to keep an eye on. Now, let's take a look at Apple in this light, and with respect to the comment of Apple at a generational buy. Now, the comment was made by Doug Cass, who is a very well-respected fund manager, and Joe Terranova, who's also, I would say, should be a very well-respected trader, who is often on CNBC. I mean, these are not just news reporters. These guys are traders, and they know their stuff. So for two of them on the same day to say it's a generational buy, I couldn't help but say, maybe I should take a look at it. Look at it differently, that is, because I have felt that Apple's been under a lot of pressure, and I know people like to quote its valuation, but I think what's happening with Apple, and this is why I wanted to talk about it in the video, is people are looking at this daily move down and saying, oh my, it's gone from 700 to 527. This is a unbelievable move down. It's an unbelievable opportunity. Well, let's look at this with some perspective. Here's the monthly chart on Apple. Okay, now when you look at long-term charts, it's often much more valuable to look at them on a semi-log scale. So that's what we're looking at here, Apple on a semi-log scale. Now the reason to look at it on a semi-log scale is to make it extravagant. If a stock is trading at $20 and it goes to 15 or it goes to 10, that's a huge move. If a stock is trading at $700 and it goes to $500, that's not nearly as big a move. Now, when you look at a chart on a regular price scale, moves from high price stocks look much bigger. So if we look at Apple, as we are right now, on a semi-log scale, and we have people crying, this is a huge sell-off and a huge opportunity because it's sold off so much. Well, relative to what Apple has done in the past, there's plenty of room for it to come down. Now, I'm not arguing valuation. I'm just saying, don't fall into the trap of a high-priced stock falling $200 and thinking this is an unbelievable correction simply based on that. All right, look at it in a semi-log scale, and that'll set you straight. Now, that said, Apple is at a very interesting point from a technical point of view for a bounce. And again, I'm going to start with the oversold readings that we look at. And interestingly, Apple got more oversold getting down to this level, and we actually have an RSI divergence at an oversold level as of Friday. Secondly, if you look at Apple's volume, it has the volume that I'm disappointed we haven't seen in the overall market. It's got a really good volume day, and if you saw the institutional volume session that we did about a week ago, you'll know exactly what I mean. This is what we're looking for in a good volume day. All right, this is institutions really stepping up. So, good reason to believe that the reversal here, from a trading perspective, is a nice opportunity. Also, if we look at just the raw levels that it's sitting at, let's take a look at the weekly chart. On a weekly basis, especially if we can get back through this low, this is our weekly moving average we like to look at, and it's more or less held that. If we can demonstrate that it's bouncing off of this low, got a daily chart that looks like it's got a pattern that could lead higher, interesting place from a trading bounce. Generational low, I find that pretty hard to believe. For me, if this was a generational low, you'd have to be saying this thing could be up 5 or 10 times the price it's trading at right now. I just don't see it, simply because it's sold off $200. At least that's my take on it. Trading bounce, I see it. Worrying that this 200-point drop is historic, it isn't. So trade it carefully if you're going to trade it. Keep an eye on these levels, and if you've got either slingshots or the institutional volume through hot scans, I think you'll be right on top of this, and I wish you the best in your trading. This is Jeff, president of MarketGauge.com, wishing you the best, and we'll see you next week.